Hello and welcome to this post-budget analysis for Budget 2016. The Union Budget came in with considerable emphasis on investment in infrastructure, in rural and of course agriculture. Now the big question is, combine this with all the many steps that the budget has taken, particularly on the areas of tax administration, is the total of all of this adding up to something significant, and if so, how significant is it? Well, I'm joined by a special panel here with me in Mumbai, and I'm going to introduce them to you. Sandeep Naik, Executive Director and CEO of Centrum Broking; Gaurav Kapoor, Senior Vice President and Senior Economist at Royal Bank of Scotland; Shefali Goradia, Tax Partner at BMR Advisors; and Umesh Mehta, Head of Research at Samco Securities. Thank you all for joining me. So, you know, the budget exercise for some people was a little underwhelming because they were expecting big ideas. For some people was in some ways overwhelming because they felt that it actually focused on areas that perhaps were not focused on earlier. The markets reacted during the budget, reacted negatively, and then seemed to reconcile themselves to the fact that there was no real damage and therefore life could go on as usual. So Sandeep, where do you want to start and where do you see the cumulative impact?
Yeah, I think the biggest positive of this budget has been how the finance ministers curtailed the gross fiscal deficit to within 3.5% of GDP. I think that number is very important, both from an international investors standpoint, as well as rating agencies were closely watching whether the government will deviate from the path of fiscal prudence. That not happening is a great positive. Number two, to spur domestic demand, there are a lot of activities, spends in agri, as you said, rural economy, social sector, infrastructure. There are a lot of ideas there to spend, and some of the allocations are unprecedented. If you take roads at 97,000 crores, to add to 1,21,000 crores that the railway minister announced, roads and railways is having an unprecedented spend.
Some of it will come from outside the budget, or actually a large part of it, yeah.
And thirdly, of course, the structural reforms announced, especially in terms of ease of doing business, the special council for financial companies, along with the bankruptcy law, introducing the code for resolution of financial sector firms. I think these are all very positive steps in the right direction by the government.
Right. Okay. Gaurav, a quick synopsis from you. What did you like?
Well,
or not, for that matter?
I mean, I think positive side, consolidation clearly helpful, especially at a time when the emerging markets as a group is under so much, especially problems around China, and especially the recently concluded G20 meeting, the IMF again reiterated that for India, fiscal consolidation is essential. Not only from a perspective of, I think critically from RBI's side as well, because whatever room they have a monetary policy, I think it is critical. It's dependent on how the government was looking at on the fiscal side. So consolidation clearly continues. I think the numbers clearly, the devil lies in the detail. Their numbers are a little, there's obviously 11% nominal GDP growth, looks unlikely. 11% tax growth on top of 4% growth, again a bit of a stretch. They've underprovided for food subsidies, they've underprovided for to some degree for the pay commission itself. There's no, apparently there's no indication for allowances there. In fact, the finance minister didn't even touch upon that aspect. He mentioned it. So I would think the headline, at least in consolidation terms, is in the right direction. But the fact that the focus on fixing the farm economy, to me, I think that was crucial to start with, and I think that's where the focus is rightly placed after 2 years of distress and the challenges around food inflation, around the rural economy. I think he's tried to address them at various levels. You have investment in irrigation on one side, you have the government focusing to increase de-risk farming, looking at increasing farmer incomes by doubling them by 2022, rural roads, and the fact that infrastructure remains, even with all this, though capital spending as a percentage of GDP is still about 1.8% of GDP. Growth compared to revenue revised estimates of previous year is only about 4%, but the focus continues on roads and railways, and I think will anyways be a spillover from the previous financial year to this financial year.
Right. Okay.
And no major change in the tax code.
Right. And I'm going to come back on private investment and whether that needs to be balanced out, or could the budget have done something more there. So, Shefali, your broad takeaways?
For me, I think the biggest takeaway was the acknowledgement and appreciation of the taxpayers' contribution to the economy. And that is a big step, because that then what would follow is all the rationalization measures, as well as the attempt to offer some kind of settlement through the announcement of the voluntary disclosure schemes or through the single window scheme for the pending court cases. And that sends the key message that the government is serious about resolving the disputes. The other big thing was the announcement of the tax ecosystem for the startups. So the lower corporate tax rate, the capital gains tax exemption, even the tax holiday for a period of 3 years, all that was good. It would have been good to extend that to the larger group of companies. But unfortunately, the scope has remained very narrow. Even the promise of reducing the corporate tax rate, at least by 1% in the current year, that hasn't come through. And that was a big disappointment.
Why do you think that happened? I mean, because everyone thought that, okay, 30 to 25. So
I think he did mention in the speech that it will have to follow, several other things.
Right.
So the other pockets where the government was expecting to see some collection, that may not have come through, and therefore there seems to be the hesitation to reduce the corporate tax rate yet. But at the same time, they have now introduced the incentives for the investments in the International Financial Service Center. So some tax concessions have been continued. At the same time, they've announced the sunset on some other tax incentives which were already in place in the law. So it's a mixed bag as far as tax is concerned. But the biggest positive would be just the acknowledgement of the tax disputes and the acknowledgement that the government needs to do something seriously about reducing the tax disputes.
Okay, Umesh?
I think we think this is a path-breaking budget in terms of this budget is trying to empower the lower strata of the population. Probably 33% of the population, and when you tell them that, look, we will take care of your fear, when people can't perform because of fear, when you tell them that we are going to insure you, for loss of, 45% of the population comes under that category, which are vulnerable, and one-time expense on health or sudden calamity, can bring down to below poverty line. So I think government is rightly focused, in giving them, social insurance, health insurance. So I think, that will empower people out there to go out and, achieve, rather than, giving them money on the platter and they're not performing. Is that, look, we are creating right environment, right platform, this is it. Then many schemes, for agriculture. I think agriculture is also out there, and they are going to empower agriculture in a big way. The Bima Yojana, the insurance scheme, it's superb. Farmers are, they are even better, efficient and hard workers, than what we are here. But when you tell them, look, if there is risk, we are going to bear, you go out. All the gains, all the benefits are yours. So on mere 2% premium, they are going to insure the crop, and that's how a big revolution is going to happen in rural sector. And that's how growth is going to come up. So rather than people saying government's investment, obviously they have to do. But this time, the biggest path-breaking thing is how people from lower strata are going to drive growth. It's rural economy, it's people below poverty line, the way they have targeted subsidy, to very specific. I think that's the biggest path-breaking thing this budget has.
Right, so, Gaurav, let me test that with you. You think that, by creating the sense of security, as Umesh put it, by creating the sense of insurance and coverage, is that sufficient to at least address the problems as they are, and then secondary give them, or galvanize the rural sector to actually get more productive and get moving?
Well, I think in case of the rural economy, one key issue, of course, has been the fact that the risk around the agrarian risk has increased clearly with, even otherwise, you have had
rains,
two bad years, 2 years where you've had bad monsoons. While there is some rebalancing away from crop production to livestock and non-crop production activity, but indeed, I think there was, even from a inflation-adjusted perspective, it was time that they reviewed it. And in fact, it was announced well before the budget. So I think that clearly is positive, because fixing the farm economy in terms of productivity, in terms of efficient use of water and other inputs, in terms of actually there was the national common market was the e-platform for linking wholesale prices, or creating a national market for agriculture. I think that is another critical element.
So the question here is really, so you say that you agree that it's the bottom-up approach would work maybe more effectively at this point as opposed to maybe a top-down, which may have...
Well, I think at this stage that's what you needed. I don't think any finance minister could not look at what is happening in the rural economy. Clearly, you had 2 bad years. You needed to focus on fixing the farm sector, and in my mind, I think that is a long-term fix, anyways. Because remember, he also mentioned the RBI would now be soon be moving to inflation targeting regime, where they would be at every 6 months. They need to explain where inflation is coming from, and we all know. I mean, at the moment, 1% of inflation is being contributed from pulses itself. So it becomes, it's a challenge at various levels, not only food inflation, but from reducing poverty to reducing inequality to making farming more remunerative itself. I mean, a large chunk of the population.
Let me swing to the other end. Sandeep, what's your sense? I mean, obviously corporate balance sheets are stressed too. I mean, not like bank balance sheets, but corporate balance sheets, as many of them are stressed. They're surely not in a position, or they're wary of taking investment decisions. Could this budget have done something about that?
I think so. The budget has not done anything significant in that area, except that probably by keeping the fiscal deficit at 3.5% and putting a government borrowing at only 4.2 lakh crore, the effect of crowding out the private sector is lesser this year. The number is not overwhelming. Otherwise, you would have had the effect of crowding out the private sector from the borrowing market. So that not having happened is probably the only positive in terms of getting the private sector there for the capital that they require when the times are stressed. But if you ask me, are there any positive steps? Probably there aren't too many, and the government has probably taken more of the capex onto its own balance sheets. Yeah. And they could have done many more things, like announce, if for large projects, announcing tax holidays. Maybe you give them an interest subvention of 1 or 2% to kickstart the private sector capex, which was an important requirement from an overall economic standpoint. I think there is a little bit of a miss in terms of enough having to be done.
Right. And is your sense that for the rest of the year, I mean, the finance minister talked about listing the insurance companies. He's set himself a stiff disinvestments target again.
Right.
Do you think there's enough appetite and desire?
The appetite will come. The good part is by keeping the fiscal deficit within manageable levels, you have set it up for the monetary policy action to follow. Because you had the RBI governor telling us that he'd want to look at the rates post the budget, and now that is comfortable, so the rates can come down. Rates having come down and the government not crowding out private sector, that's a positive. Second, we've had 2 bad monsoons, and the law of averages say India has never had 3 consecutive bad monsoons over the last 100 years. So with a good monsoon and these things falling in place, you would probably see enough action in the equity markets in the second half of the year, and the appetite coming back. So I wouldn't be too worried on listing of these enterprises.
And you feel that in terms of global capital flows, we are still steady? I mean,
at this point in time, there are no flows, the outward flows because of the larger stress in the globe.
So you see them coming back?
They should. I mean, if India is the bright spot, you acknowledge that India is the bright spot in a world that's stressed. If you look at the BRICS, the I is the only country standing. So smart investors are waiting. They want everything to settle. When the dust settles, investments have to come back to India.
Did this budget process contribute to the settling of that dust?
The budget process itself is an internal document. What it does probably is
as a positioning statement.
As a positioning, putting the deficit at 3.5% is the right signal.
Okay.
And I think so. Rating agencies would look at us favorably. And overall, an international investor looking at it says that there are no micro problems. The macros are fine. So I guess more investment should come into India as the year goes by, and you should see the flows reversing back and money coming into India. World needs a replacement for China as an asset class,
right.
And I think India is getting set up nicely for that.
Right. So, Shefali, the finance minister did commit that there would not be any further hounding of, on the retrospective tax side. But, given the fact that there was a notice sent out quite recently, which they've of course dismissed as more administrative rather than actually, or procedural rather than administrative, are you getting a sense that things are settling down when it comes to, big ticket tax reform?
So it's again a mixed experience, Govind, because on the FII's front, where the whole MAT controversy was there, I think they have now brought that in the law and clarified that MAT would not apply to the FIIs. The language is a bit iffy, but overall there is a comfort that the FIIs don't have to pay MAT. But at the same time, on the retrospective tax on Vodafone and other companies, the government seems to still be keen to collect the tax. And the amnesty that they've offered is that if these companies pay up the tax, then the government would waive the interest and penalty. And I'm not sure that is enough to really bring them to the table, because they are disputing the levy of the whole retrospective tax. And what would have been good for the investor sentiment would have been to send out that message that India is willing to, amend the ways and give away or give up on its right to collect this tax. If retrospective tax was a bad move, then I think it's time we really own up to it and not insist on our sovereign right to collect and levy the tax. But other than that, there has been one more move that India has made, which is on the equalization tax. Now, this is a new tax that India has levied, and this seems to be in response to the whole BEPS phenomenon on the digital economy. They've opened up a small window which allows them to collect a 6% tax on all online ad payments that are being made from India. And it says that it can also
be payments going out?
That's correct.
Okay.
So Indian residents making payments to foreign companies for online advertisements. And on that there is a 6% tax on the payments. This is not an income tax. This is a new equalization levy. And this just seems to be a window that the government has created in response to BEPS. Nothing stops the government from adding more types of income to this category subsequently. And if this is not an income tax, foreign companies will have a tough time taking credit for it in their home countries. They may not be able to reduce the levy under the tax treaties. So it just seems to be a whole new tax that government has come up with.
So what was it trying to plug? I mean, one is trying to understand the concept.
So I think the general, the view of the government, and this has been the feeling world over for the digital economy, that these are virtual businesses which don't have a nexus to any one particular country. And many countries feel that their tax base is being eroded. So this is their way of imposing a tax regardless of where the companies are based. So it is a parallel levy, and this will be a whole new tax outflow for the e-commerce companies.
Okay. So is that something that you would place in the context of new businesses? It's like something that you never knew happened before, and therefore you shouldn't treat it as a bad thing. And there may be other taxes or levies or cesses which people may regard as negative.
No, I would think that even this, because it's not that these companies don't pay income taxes. They may not be paying tax on some types of income because the law does not currently impose the tax, but they do pay income taxes. And levying this as an equalization tax, as a new tax, is in addition to the income taxes that they may be paying.
So you think it's a googly? I mean,
it is a googly.
Okay, right. Umesh, so what's your sense? How is the market looking to you next 6 months to a year?
So in 2.5 decades of our Indian history, what we have seen is bear market in 9 out of 10 times. Bear markets have lasted for 60 weeks, and probably guess how much weeks we have passed. We are somewhere around 56, 57 weeks. So maybe 2-3 weeks more, plus minus 1 week. Maybe you could make a big bottom. So in terms of sentiment, in terms of climate, in terms of today everything, people are pessimistic, the sentiment is negative, the global headwinds are negative, and always this had been a case, when there are typical bear market bottoms. But typically the huge amount of outflow which already foreigners have done, and the valuation, the compelling valuation right now which market is, I think that makes a compelling case that it's time for a market to cool down, stabilize, and again start a bounce back, a real
Okay,
rally.
so you're saying we're nearing the end of the bear
Correct.
market. Okay. Do you agree with that, Sandeep, or were we in a much larger bear market?
No, I think so. The way to look at it is, yes, there's stress in the world economy, and this is uncharted territory. So difficult to call where is the bottom, but we've endured a large part of the violent market worldwide, and a lot of flows have already moved out of India. And in terms of valuation, as my colleague pointed out, it's at the long-term average, 14.
10-year low.
Yeah, it's at the 10-year low, or the long-term average of 14.5 times forward. And the big question that everyone has in mind is, will the earnings come? Last 8 quarters, the earnings growth hasn't come. But there are a lot of changes that are happening on the ground. One, you could have this interest rate reduction coming to help earnings. Two, if you see large part of the credit costs, banks have taken it or will have taken it by the March quarter. So next year is obviously going to look much better because you've already upfronted the credit costs into the previous year. So banks, which constitute almost 30% of the index today, will look much better going into next year. And if you have a good monsoon, the FMCG also sector starts to revive from the third, fourth quarter next year. And commodities anyway at their cyclical bottoms, so any recovery from here will make it look good. So I think so we are somewhere close to the bottom. I don't know the exact
we're
bottom.
well poised. I mean,
yeah, we are well poised to start a good rally, and equity markets in India could give very good returns over the next 2-3 years.
Right. Gaurav, so $1 million question. So all of that we saw in the budget, I mean, how much of that will transmit and transform either the rural economy or the rural plus the urban economy?
Well, at the moment, I think in the near term, I think depending on the monsoons, you will, if indeed it is, you get a normal monsoon, I think that will be a significant boost. But I think at the moment, at least in the coming year, I think it's really the urban consumption and private and public investment which will continue to parts of the engine which are really firing, and it's really urban consumption because with the pay commission coming in and the impact it would have not only this year, over the coming years, because this typically is followed by states and close to about 20 million people are affected directly. And so I think so while fixing the farm sector, I think all those investments would show up in time. And in fact, you will have a spillover from previous years' investments in the roads and the railway sector, which would at some stage start generating returns. Because remember, the fiscal multiplier of capex by the government is 2.4, whereas revenue is about 1. So it takes time to show up, but it shows the bang for a buck is much more in case of capex, and so is the case in the rural economy as well, because you're not only building hard infrastructure, I think you're focusing on the soft infrastructure as well, which over a period of time, I think it's a long shot, but it's a necessary thing which needs to be done to actually ensure that you have macroeconomic stability over a longer period of time.
Okay, got it. So let me get a quick unfinished agenda and then we wrap up. Shefali, do you want to go first?
The unfinished agenda, I would say that there is a lot more that is required on the administrative reform side. And some more thrust into how we can improve the taxpayer experience on the ground, even before it gets into a dispute, would have been welcome. On the retro tax, I would have said that again the government missed the opportunity to send the positive signals that it is able to and it is willing to correct on the past mistakes. One of the negative things that happened was on the dividends. I think the representation was to replace the dividend distribution tax with a withholding tax, but instead the imposition of the new tax for the individual shareholders on the dividends received, that is again going to be a dampener.
Only for a few people, isn't it?
Yes, it's only for a few people, but that's where the money is, right? Okay. So if you want to, I think one of the statements that the finance minister made was that now we need to focus a lot more on the domestic market and the domestic investors. And I don't think this is going to help there.
Right.
Because if the focus was on the high net worth individuals or the family offices, I think this 10% tax on the dividends is going to play, foul with them.
Okay, so maybe it'll be reviewed. Umesh, just one last quick word. I mean, what's the one thing that you would have liked to see which you didn't?
Maybe more simplification in tax structure, in entire, the way we are interfacing with the government, the digital part, digitization, that has started. But that could have been, done in a more deeper way, because implementation can be done quickly. We don't have to, do in pockets. So I think that could have been a big leap forward in terms of our increasing efficiency, increasing the country's,
Right.
making it more efficient. So that was a...
Sandeep, last word quickly. Yeah.
I think more could have been done on private sector capex to fire that up. And two, I think more follow-up would be required. I don't think 25,000 crores for banking sector recap is enough. I think in terms of, like they set up a bank board which is positive.
Bad banks. And a separate bad bank.
And allowing one of the banks, IDBI Bank, to go below 50. I think government will have to go below 50 in many more banks to get the capital they all require.
Right. So you're saying that was one thing that you would have
That's an area that could have, more could have been done in that area. 25,000 crores is not enough for the problem that we have on hand.
Right. We've run out of time. Thank you so much. We've run out of time completely on this special edition of Post-Budget Analysis for Budget 2016. Thank you very much for watching.